So welcome back to the Wyckoff Starter Sequence series, and this will deal with the process of accumulation in the market. And the two best examples that we will show today will be the bond market on the daily, weekly, and on the S&P daily chart as well, since those have been two of the markets that have been the biggest bull market, and we can see that the aspect of the markets is shown the best in that regard. And we had gone over the distribution process, and obviously the accumulation process becomes the opposite process in that market, in the procedure of Wyckoff. And one of the things that we see here in the accumulation process is that we'll go through some ending action that will lead to some upside movement, and that will lead to markup in the situation. So we'll pay very, very close attention to some of the bar behavior and the action that occurs in the market. There are several ways actually that a market can bottom during the accumulation phase. Is one through the selling climax, and one could be so much of a shorting of thrust, but in both cases they will need demand to come into the market. So we will go through that process, and sometimes this process is not only one bar, it can be two bars as far as that's concerned. So let's go through the process of the accumulation process that's easily shown as far as that goes. So let's do our disclaimer. There's a substantial risk of loss in trading commodities, futures, and options. Past performance on indicative of future results, and the opinions here are expressed through LTG, LTG, are not to be taken as recognition of buy or sell commodity future options. This for educational purposes based upon the teachings of Richard D. Wyckoff. So let's go through the process of the accumulation, starting from the beginning and going up to the markup phase in the particular market. Let me spread this